We are also measured fairly well when it comes to assessment of number of players who are participating in the mechanism. We have all the banks participating, the microfinance banks, a number of SACCOs, a number of microfinance institutions that are credit only, a number of digital lenders, and just the mere scope of participation has given Kenya's mechanism a fairly high rating. That's not to say that we have overcome a number of challenges. We are facing a number of challenges, and we shall talk about them shortly. But in the context of this conference, digital lending is the other arm of this conversation. Digital lending has grown tremendously as well in our market, and we are impressed with its contribution to financial inclusion. More recently, the Digital Lenders Association was launched, so kind of as to provide a testament to the growth of digital lending in this country and play a role in organizing digital lenders to not only play their rightful role, but also to protect the industry from some of the risks that have been identified. And so I'm pleased to introduce the panelists now. I'll probably ask them to just do a self-introduction. We have 3 bureaus in this panel, and we also have the chairman of the Digital Lenders Association, who at the same time is the CEO of Zenka Finance, a digital lender. And I would like them to introduce themselves, and as they do that, I would like them to quickly speak to their contribution, their respective institutions' contribution to providing data for risk management, as well as for providing solutions as credit bureaus, solutions that promote the growth of digital lending in the market. Thereafter, we'll pick up a few concerns around fraud, around loan stacking, and we'll be joined at some stage by a representative of Safaricom, who will also speak to some solution that they have introduced around the issue of fraud in the digital lending space. Let me begin now by inviting Billy to introduce himself and speak quickly to the conversation around what is his organization doing in the space of credit information.
Thank you, Jared, for the introduction. My name is Billy Owino. I'm the Chief Executive at TransUnion. So TransUnion, we are a technology company that plays in the risk information solutions services. We are one of the CRBs, if you want to call it that, one of the bureaus in this market. And being in this market has been very interesting for us. Of course, starting as a traditional bureau from what is famously called as the blacklisting days. But I think for us, being a player that is in about 34 countries, we've been able to leverage a lot of technology capabilities to really work with the financial ecosystem to drive solutions just beyond things like customer scores, but to start looking at other solutions that the market needs around the use of data, really to drive access to finance for consumers, because we know that a market like ours, it's use of data that will drive that access to finance for consumers, where there's very limited data from a traditional financial. I'm very excited about this session. We know that fintech and digital lenders are going to are already playing a very key role in this space, because almost 2 out of 3 new consumers who are becoming new to credit for the first time are actually through the digital lending platforms of the fintech. So they're playing quite a key role for us today. So excited to be here to really look at how can we take this forward.
Yes. Next, let's hear from Credit Info.
Okay. Hi everyone. My name is Nancy Kinyanjui, and I'm head of analytics and products at Credit Info. And I've been in the credit bureau industry for all my career life, starting as a data analyst at TransUnion and now heading analytics at Credit Info. I'm quite excited to have this conversation because For us as Credit Info, we are more of decisioning partners for fintechs. So we want to help because we understand the nature of a fintech and digital lending is they want their customers want a facility very, very fast. And as a fintech, you want to be able to pick very good customers as quickly as possible. So we plug in where in a way that will help you in decisioning. So we help you make decisions on what are the best customers to get, because as a credit bureau, we all have data on our customers' liabilities from a banking perspective and non-banking institutions. So you're able to see your customer when you're querying the customer, how are they doing? What's their repayment history? Is it a good customer? Is it someone who picks loans and doesn't pay? And you want to do that as quickly as possible. So we have automated decisioning tools that are able to do that. We also help in account management of your portfolio as a fintech. And I'm quite excited to have this conversation because I'm looking forward to where all the fintechs will start sharing information, and I think we'll speak about that in more detail. But information is key, data is key. It helps us do decisioning, and the more data you have, the better the decisions you're able to make. I think as the conversation goes on, we'll talk about fraud as well and how we assist fintechs take care of fraud.
Thank you. Let's have Robert next.
Good afternoon. Thank you, Gerard, for having us. I am Robert Masinde. I'm CEO of Zenka Finance, and I'm also the current chairperson for the newly formed Digital Lenders Association of Kenya. I think the concept and space of credit information sharing is very critical and fundamental to us in the digital lending space. Probably more than the other lenders that also participate in the credit market. Reason being, we basically rely first and foremost and almost entirely on information to lend. We do not hold collateral. We do not subject our clients to the stringent credit assessment measures that, say, traditional institutions have. We do not ask for references, bank statements, and all that. The main basis for our credit decision is information. So the quality, the quantity, the speed at which we can access and share and translate this information into a credit decision, the better for us and also the better for our clients. We are still in the early stages. This industry is not anywhere near maturity. I think in most ways it's still at infancy, and therefore we are seeing a lot of transitional, transformational, and even disruptive encounters as we go along this path, engaging with the credit reference bureaus and trying to create and to project what will make sense and what will work for our client base. Because the reality is the credit reference bureaus were there, predated the level of digital lending that we're seeing now. So it is expected that at some point, the type of data, the mechanisms, obviously, we need some adaptation to the new offering that is emerging in the market. So we look forward to engage further, and I'm glad to have been included in this panel because really the future lies in the direction that the fintechs are taking. And I think the banks are coming along, and definitely we look forward to that point of convergence. Thank you.
Thank you. Esther.
Good afternoon.
Good afternoon.
Thanks, Jared, for this session. I'm Esther Maruga from Metropol Credit Reference Bureau. Metropol CRB is one of the licensed CRB in Kenya. We also have a license to operate in Uganda. And maybe for this discussion, one of the things with Metropol, we have focused in terms of data collection, especially if you look at the legislation in this market, we have the institutions that are mandated to share information within the CIS mechanism, but there are also other non-banks and fintechs included that have gone out of our way to actually bring them on board. And in this case, it's just to get as much information that is in terms of data so that when the fintechs are doing their own appraisal, you can be able to have a more 360-degree view of how the borrower has been behaving out there. And we have had different sector scores that you're able to align, so that if you're a fintech and you want to just understand how the borrower has been playing in a particular sector, then we're able to give you the payment behavior in that sector. And the other thing is that we've had other partnership also in terms of customer awareness. As you realize, is that there's a lot of low financial literacy in the market. So what we have done is that we partnering with fintechs to be able to provide this borrower. By the time you are borrowing, are you able to know what information has been submitted on you on your profile? Because you realize the way the CRB was introduced in this market is that you have customers understanding them or interacting with the CRB when they're in the middle of getting a loan or just having an interaction. You have a tender, and that's the time you're told that you have information or negative information on the CRB. So we are taking a proactive approach, other than reactive approach, by ensuring that we put the borrower first and be able to know what kind of information has been submitted on you on the CRB. Yeah.
Thank you very much. From that first round of introductions, at least we know now that there are three licensed credit reference bureaus in our market: Metropol, TransUnion, and Credit Info. They are licensed by the Central Bank of Kenya, and at least the licensed institutions, banks, microfinance banks, are required by law to submit data to all three of them. And so they don't compete on that data source, and the specifications for data submission are defined. At the moment, that frequency of update is monthly, unless there is a very specific update during the month that is done within. But there is a project that we shall speak about shortly that is intended to increase the frequency of that submission, effective next month, within a month or so, 1st of September. There is some work going on to update that information on a daily basis. Robert represents, for this particular case, the digital lenders. He runs a specific digital lending institution. I'd like him to kick off this conversation by telling us more specifically what are some of the challenges and how real are the challenges that you face in using, or let's say in rolling out this very innovative product, mobile lending. If you could mention some of the key challenges that you face, and would like to hear whether the bureaus are up to task in providing solutions to some of these. We'd like to know whether in reality there are specific issues. If you could describe to some level of detail what your customers face in terms of risks of engaging with digital lending, and what kind of solutions you're looking for, especially from the credit bureaus.
Okay, thanks for that question. As digital lenders, as you all know, I think suffice to say, I assume everybody has a good sense of what the service or the product entails. We are basically reaching out to a market which most likely, prior to that first loan, had never gone through a credit process. It's their first encounter with borrowing and with credit. And therefore, we start at small amounts, and we start them at small amounts and shorter tenors for them to be introduced into the world of credit, so to speak. Now, if you're dealing with a client like that, first and foremost, chances are you will not find any information or credit history with the credit bureaus. And so we have a lot of queries which we go in and come, with no information, which to an extent is still fine, because it's still information of some sort. So that the fact that they're not listed, that's the first thing. It's rare that you find a bank client who comes in and is nowhere in any record across all the banks and across the credit reference bureaus. So then the second thing is that because we want to deliver this at a very instantly, so to speak, we need instant information access, and our queries need to be responded to instantly. So therefore, you need automated access. You cannot have a manual interface to serve our kind of business. The whole value proposition collapses when you try to use the cycle time that you apply for banks. And I fortunately have the benefit of having worked in banking for most of my years, and now having crossed over to digital lending. So I have the full contrast of what happens when you are seeking credit approval and you're doing credit checks in a bank. In particular, I used to work in a corporate bank, and you will probably process 10, 20 loans, in a month. So 1 month a monthly update is pretty sufficient for you to have a full picture of of how to score your client. In the space I am now, we are moving now to, as Jared mentioned, to a one-day updates, daily updates. Guess what? For some of our clients, even daily updates are not sufficient. I still look forward to the time when we'll have intraday updates, okay? And we in the digital lending space are happy to work with the bureaus to contribute to designing the kind of processes and platforms that can facilitate this kind of data interchange. We are not doing this because it's a nice to have. We have actually a very large client base that is demanding this kind of service. I think if we start from the consumer's need, then it's easier to work backwards or to understand why we need the kind of solutions or why we face the challenges we do. I'll give you one very basic example. This is somebody I know personally. The guy is a border driver, okay, a rider rather. For those of you who are not from Kenya, who don't understand the lingo, border riders are the guys you see around on motorcycles, giving people transport from point A to Z. It's become very popular because you avoid traffic, you get your locations faster. He tells me he wakes up early, 5, 6 a.m. The biggest challenge he has at that point in time sometimes is he doesn't have enough money for fuel. That is his one essential input for his, what you call, micro SME. He needs only 1,000 bob, but this is between 5 and 6 a.m. Okay, the only people who can give him that kind of money at that time are the digital lenders. He will go to his app, he'll take the 1,000, he'll do his 10 trips. By the end of the day, he can pay back easily. 500 bob per trip earns him about 5,000. He can pay back the 1,000 with the whatever commission on top. Now, if you look at that kind of need, I know it was always there, but you see, if you look at all these guys operating in that sector now, if you observe closely, there's been a type of expansion, and part of it is because they're able to access this level of microcredit. It's not just micro because it's small, but also because it is instant, it's real time, and it's online. So I think without going into too much detail, the kind of expectation we have in this collaboration with the reference bureaus and with the regulators is that we end up in a scenario where the CRBs can properly adapt to the requirements, not coming from us, but coming from the client base that we all serve eventually. I think I'll leave it at that and answer questions later.
Thank you. Let's have Billy here address the issue of fraud. I think you have encountered challenges on the fraud side or on the digital lenders side. And what's your experience on that challenge, and what solutions do you have for the industry?
Yeah, so that's something that we see coming up a lot now, working with the digital lenders. And there, Robert, I have to say congratulations on launching the association. I think it was very necessary that takes place, because if you were to start solving some of these problems that you're talking about, the digital lenders also needed to kind of like come together, yeah? Because I'm sure all the bureaus will agree, some of the solutions we tried to push, but when you're talking to 50 different fintechs, it became a little bit difficult. So that was it's a really good move for the industry. That's very timely. Yeah? So when it comes to fraud, so some of the things we see coming up a lot now is especially on identity fraud or identity theft. And that's a scenario where, that visitor's book, I like giving this example, that visitor's book that you fill in and give away all your details when you're getting into that building. I know we're in a data session, is now data that is being mined by fraudsters, yeah? And they're using entities which they can get onto these platforms and take loans from. So we serve about, on average, about 100 customers a day who have come to query their credit report, negative listings and stuff like that. And out of those 100, on an estimate, every day we serve about 4 to 5 customers who have come specifically because they're dealing with a case of stolen identity and their ID being used to take a mobile loan, which ends up in default. Yeah? So that's an area that is cropping up a lot. I think if I look in the last quarter, we've had about 2 fintechs who've had to write off quite a number of accounts because they realized that these were fraudulent. Yeah, it was stolen identity. So that's coming up quite a bit. So it's something that will take industry effort across from of course the bureau side, the lenders themselves coming together, but then also service providers like Safaricom, which becomes very, very key. And start looking at how do we start plugging these holes to ensure that identity theft is not becoming more and more of an issue? Because currently it is, it actually is. So my advice to everyone is normally, just interchange your ID number if you can, or phone number. Don't give your true details in those buildings. So and then the other one is so loan stacking is interesting because it could be fraudulent or it could be someone who's under distress. I won't talk about the distress side. I talk about the fraudulent side of it. And this is where we see somebody, jumping from one app to another, and it could maybe have 10 of them, and taking a facility from each one, with the intention of not paying back because it could be he's using somebody else's ID. So those are the 2 cases of fraud that we're seeing a lot. I think the key solution we see from our perspective, and I think my colleagues will also agree, is that if you have to start solving for fraud, there has to be real-time data sharing, if you want to call it that, because that data sharing then allows, one, on the fintech side, they don't operate in silos, so that visibility is there. But then also, when they come to a bureau, apart from just doing the normal ID verification or maybe picking up a score, they can also be able to see. So Billy, who's gotten onto my app now, in the last 1 hour, for example, how many apps has he also been on trying to borrow? Yeah. Now, and if that frequency, on our side we call it velocity, so the solution we launched around that, we're calling it a velocity check. And that velocity check really tells you, in the last 1 hour, he's been on another 5 platforms. Yeah, because remember all these fintechs check, they'll do a check with a bureau if you're trying to lend. So that might not be something that says is bad, but it's more just have a look, have a second look, to find out, why is he on another 5 platforms already? Could it be fraudulent? Is this somebody who's just already overborrowed in terms of being burdened, so that he could be a potential NPL? And I think that will help. But then to really get it going, I think data sharing is going to be very, very key to drive that whole ecosystem forward.
Let's hear what Credit Info is, how you are addressing some of these issues, if you have observed them as well, and what solutions you have.
Well, we have observed a lot of cases. I've had clients who've come to me and saying that I lent out to this pool of customers. They were good customers when we were checking on them, but now they're not paying me. So we realized that, as Billy said, there's a lot of identity theft. For the case that I have experienced with a lot of my clients is where a customer comes and says, this is not my phone number. I had a customer who came in and said they wanted their credit reports, and they had like 20 loans and they have never borrowed. And they said their IDs, but the phone numbers that are listed there are completely different. They don't belong to this customer. So someone picked an ID, registered a new line, and borrowed with it. So the solution that we came around it is, as a bureau, we receive a lot of data, and part of that data is a mobile telephone number, which is it's your key account number when you're borrowing on digital lending platforms. So what we usually advise our clients is, once you're doing the bureau check, can we check whether the number that's borrowing is actually registered to that ID? If that number is not registered to that ID, we usually give you a decision to either decline that application or refi it. That way you're able to restrict the customer, the guys that the fraudsters that go pick an ID, register it with a different number. So that's one of the things that we've done to mitigate a lot of that fraudulent identity theft sort of fraud. Another thing we check is first time default. Default is a very key indicator of fraud, especially the first time default. If a customer comes on your platform, borrows and never pays, most likely it's a fraudulent application. So in our decision engine, our automated decision engine, those are some of the things that we check. Is the customer applying a first time defaulter elsewhere? Again, in terms of velocity, as Billy spoke about, how many loans have this customer picked in the last 7 days? As you're doing our analytics, some of the trends that I pick up is, especially for mobile loan and even traditional loans, a customer that the portfolio of customers that are very bad defaulters in the system are guys who have 5 or more loans open at the same time. So whenever you're doing a check on your customer is applying, you also check whether the customer is having more than 5 open loans at the same time, because this speaks to either a customer's very high appetite for debt, which means the rate for default is very high, and also fraud. Again, if you're picking today 5 loans in one day, then there's a problem with that. So there is solutions towards that. And I think when the fintech starts sharing that information, because right now we have visibility of very few fintechs who are reporting, the likes of Tala Branch, Mshwari, KCB M-Pesa. But the minute the DLAC, they start sharing the information, I think it will be good, because from what I've seen even on online platforms is a customer will easily pick a loan and not pay. Why? They'll say, you guys don't check the bureau, or you don't list in the bureau. I saw in the Wova app, someone put a question that some of my customers still say, even if I threaten them that I'm going to list them in the bureau, like, yeah, I'm still going to take a loan somewhere else. They are not checking the bureau. So we're not really, in terms of financial literacy, we are not doing very well in that area. And I think there's need for that information for the customer so that we are able to promote responsible borrowing as well as responsible lending.
Thank you. Let's hear Esther and Metropol. What solutions do you have in these areas?
Okay, every time we hear about fraud, and especially identity fraud, then what comes to mind is a question of KYC. How was the know your customer process done? And I think that's where we need to have a solution to say, if the process is not tight, then it means that eventually what we see from the bureau side, because that information is what is shared in the CRB, is customer complaints, and also having all these incidences about identity fraud. So of the customers or the disputes that we receive on a monthly basis, we find that 60% of those cases are purely on identity theft. And it's clearly, like my colleagues have said, a customer saying that this is my ID, but the phone numbers listed here do not belong to me. So what we have done as Metropol is that we also keep a database of verified phone numbers, and we're able to get this from customer interaction, and we also get it from our platform. We have a digital platform where customers now are able to subscribe to our services, and in this case they're able to download our app and able to go through that process where we get their information, and we have verified phone number, which is information that we'll be able to pass to you at the point you are lending. We'll be able to tell you this is information that is verified, that is, if there's an ID and the phone number that is verified. But other than that, we have also partnered with a company from Australia by the name Engineers, and what we are doing with that company is basically to flag any suspicious transactions that we engage. You find that for you to list a transaction on the CRB as fraud, then that must be proven in court as fraud. So what we have done is that we've come up with or we have partnered so that we're able to flag those suspicious account, so that the point that you are lending, you find that an account has been listed as suspicious, then you're able to probe more, because we will not be telling you whether this is this is a real fraud or not, but you can be able to have some controls that will be able now to mitigate that fraud. So the other thing is the issue of real-time data reporting. I think we cannot downplay the importance of having this information, because you find that with the market we are looking at, where customers are borrowing in the morning, of information that we miss as we wait for the batch data submission. So if that information is provided to the CRB, then you expect that the output of what we'll be giving to you or to the fintechs or to the market at large will be more updated, more fresh, and you'll be able now to understand the dynamics. This customer who is borrowing or downloading every app will be able to capture that information. But the way the market is right now, if you are to wait for 1 month, then it means that you will have there's a window for them to actually take advantage of that system. Yeah.
Very much. I know that Robert wants to add something, and as he does, I'd like to invite Safaricom, because the conversation has been focusing a lot on SIM swaps and related risks. I know Safaricom has been concerned about this as well. So as Robert makes some comments, I'd like to invite the representative from Safaricom to join us at the panel. I guess it's going to be Eric Mugo. Please do join us. Eric is the Senior Manager, Fraud Investigations at Safaricom. You're welcome to join us at the panel. Robert?
Thank you. I thought I should add some contribution on what DLAC is doing about this, because as digital lenders, fraud is definitely a very, very high hazard for us and a very high risk. We take a lot of losses on fraud. We mentioned, someone mentioned earlier, that it's easy to access ID information. Most of it is identity fraud, but it's not only in the. I agree. Those books where you put all your details it's quite a big exposure for everyone. But nowadays you can go online and find everyone's ID details and names from the election register, for instance. So the fraudsters are having a field day. All they need is a name and ID. When you check with the immigration for the match ID and name, they will match. So then they are registering a SIM card, then becomes possible for most of them. It shouldn't be, but sometimes it does. And we know there's no way you can stop someone from registering multiple, more than one SIM card. So yes, it's been a concern for us. However, the other distinct feature about fraud about fraud for digital lenders is that it happens within milliseconds. Most other lending institutions, there is a bit of a lag between the time the fraud is initiated to the time it's completed. For us, it's basically instant. So we have to devise new methods to combat it, and because we have not yet achieved real-time data sharing. One of the initiatives we have within DLAC is first to just start a fraud exchange, what we call a fraud exchange. Because the typical behavior we have seen among these fraudsters is when they hit one of us, they'll try all of us. And it depends on where it goes through. So they go through 10 apps in less than in a few minutes, and whichever works, they'll hit you and move on. So if only we had a way of flagging numbers that are obviously perpetrating a fraud on our systems, it will be better for all of us and better for our customers. The other challenge, obviously, we have, why reporting fraud is very difficult, is if you list these numbers, you're listing a number used by a fraudster, but an ID from an innocent party. So it becomes very difficult in how you share this information. My hope is that, and I think the solution will not lie with any single party in this entire service chain. I think it will have to be cross-sectoral. I think the people, anyone, any institution which is mandated to handle data, information that belongs to individuals will have to exercise due care. And for that reason, I'm happy there's a data protection bill coming up. I think all these institutions, including institutions like elections, IEBC, NHIF, much of the information sometimes is just too easily accessible and is misused. That includes all of us who handle customer data. That's only one touch point. The other, obviously, is that the telcos as well, we have to work with them. They are coming up with solutions, and we need to be close to them and express the needs that are emerging in our space. And then, of course, there are the CRBs. And lastly, the consumers themselves. I think the higher the level of awareness around the risks and the possible pitfalls that can arise, the better for all of us, because they also have a role to play in safeguarding the information that ends up being abused. Sorry, I should add one more thing. Yeah. That as DLAC, one of the requirements we are going to lay out for all members joining us is that eventually everyone will have to commit to data sharing, because right now it's voluntary, but because we want to establish a certain standard within the market and improve the entire environment within which we lend, we want to make it mandatory for a member to commit to data sharing, because sharing is only valuable when it's being done across the entire spectrum of players as opposed to only a few lenders.
Thank you very much. Let's hear now Eric's perspective on fraud prevention and what Safaricom is doing to support this exercise.
Okay, thank you very much for this opportunity. As I've been introduced, my name is Eric Mugo. I work for Safaricom as a Senior Manager in Fraud Investigations. And this afternoon also, it's a special thing for me. I used to work for SPM before I joined Safaricom, and particularly proud of that. First off is an interesting statistic we've observed over time in terms of the lines and KYC, as she mentioned, is that we noted that out of on average, for every customer, at most they'll have 3 lines. And over and above that, the 4th and 5th line, chances are it's not possibly owned by the customer, and they're not aware, on average. Not so many of us have those lines. In other cases, it could be where we've reached probably in our lives is that we will tend to hold on to our line. Even if today I lose my phone, I'll make sure I go to an agent, to the shop, and replace that line. But that's not the case for a certain category of people. They lose their line, or the line blocks or something. They just go and register a new one and forget about the other one and move on. So we've had a challenge around how do we establish, out of these 5 or 6 lines that are registered with this particular ID, how do we establish this is the primary number of this customer? Because we are trying to come up with a solution where we can be able to sort of inform the primary line that, hey, there's this new number registered in this ID, please confirm. So that's something we are working on. It's internal, because the idea is that there is no restriction. There is no law that says you cannot have more than X number of lines. So we cannot stop somebody from registering, but we need to have something that we need to have a way of establishing this is a primary number, and then alert that person that there's this new line that has been registered, and therefore the customer will be able to make a decision. Particularly one we launched and is out there and it's ready for consumption is the IMSI service. This was launched, I think, 4 or 5 years ago, the first, or what we call phase 1. And that simply would be the institution that is querying Safaricom would simply ask, when has this line been swapped in the last 48 hours? and the answer would be yes or no. That was as simple as that. Unfortunately, the uptake was not that good. And so last year, when we started experiencing a lot of fraudulent banks, and they were losing quite hefty amounts, and this is not even KYC. Root cause is not KYC. It's basically hacking, for lack of a better word, where they would compromise the server that sends the money out, and from there launch instructions to deplete that particular pay bill and forward the cash to many lines. So as a result of these mobile money forums we've been having, we've been receiving a lot of feedback on certain areas or controls that we can implement to help. And IMSI was actually as a result of these forums. So what IMSI does is it's basically information we are providing to. It's an API, so you can plug into it once you apply, and it's not a publicly exposed API. You need to plug in, you need to request for it. So it gives you essentially two sets of information. One, when was this line registered? Or in other words, age on network. And the way it's been structured is if the line is less than 6 months old, we give you an actual date of when it was registered. If it is older than 6 months, we'll just give you that information, that answer that it's older than 6 months. So what you choose to do with that information is now per your business rules. The second piece of information we give you is a swap date. So this is how it works is if the line has been swapped within the last 3 months from the day that you've queried, we'll give you an actual date. And for example, as a business, if you're querying and you find this line has just been swapped a few minutes ago or swapped yesterday, you might want to treat it differently than one that was swapped 3 weeks ago. Yeah. And again, why we structured it that way is because the use cases are so many for different partners. For fintechs, it could be they just want to know how old is this line. Can we lend it? Can we lend to it? For a bank, it could be that someone has ordered an RTGS of 50 million, and we need to confirm whether these instructions were actually issued. And when they check and realize this line had been swapped yesterday or some few minutes ago, then they will treat that transaction differently. So IMSI, that is presently how the solution is. There are certain proposals to amend it and make it better. And part of the reason why we set up the forums is to get feedback, because we could sit at the HQ and come up with solutions that we think is what our customers need. But the best thing is to have these forums and get feedback from them, and then we try and come up with something that will be useful.
Thank you very much. Thank you, Eric, and thank you, panelists, for very useful insights. Now I'd like to invite some Q&A for wow. Okay. Now, if I start at the end, I may never get to the end, so I'll just take 4 questions, and that's going to be really tough. Do you want to help me? Yeah.
You want me to pick the 4?
Yes. Me.
Okay. Or 1, 2, 3, 4, 5, 6. Okay, we can have this 6.
Yes,
very brief.
the 6, please, very briefly.
Okay.
Let's start here. Very, very brief and to the point, yeah?
Awesome. My name is Simon, Cooperative Bank. Quick questions. What do you see as the role of CRBs in enhancing data privacy for final consumers, or rather for the utilizers, for the borrowers in this case? And then how can we enhance? I have good credit scoring. My credit score is good, but the bank doesn't consider that in giving me enhanced or better credit than the person who is a few points less than myself.
And IOC.
Thank you. Your neighbor.
Hi everyone. My name is Ken Willis from FinTech Kenya, and I've structured my questions into three ways. Okay, the first one is on information sharing. And you indicated that the information is shared, every institution has to send to each of the three CRBs. So is there something that you are working on so that probably the information can be sent to one location with one format that then all the CRBs can get, so that it is even easier for the banks to share the information?
Thank you. Next question.
The second question is on regulations.
Yeah.
Since we have the many digital lenders, we also have the SACCOs, MFIs,
Yeah.
and currently I'm aware that like most of the SACCOs, actually not all of them are compliant on this.
Yeah.
There are regulations
Next-
that have been put in place
next
for that.
question.
Then the last.
Mic check. Mic check, be there.
Mic check.
Yep.
So let's